The 2023 outlook for gold and silver has changed a bit. Seems like we might have a little bit more time to buy, but that's my opinion. Let's get someone else's. We're going to talk to an expert. I mentioned in a recent video that the gold and silver outlook for 2023 has changed recently. Certain conditions have changed, some possible issues were avoided. Inflation has remained high, and the Fed policy now seems to be higher rates for a longer time frame. In short, the 2023 outlook looks different today than it did 2 months ago, and Lior Gantz is here to tell us what he's seeing. He's going to explain how it applies to gold and silver prices. So, Lior, let's just jump right in. Maybe start with the Fed policy and interest rates and how that's affecting gold and silver prices.
The best friend to any person that's stacking both gold and silver is what's called excuse me, the CME Fed Watch Tool. So the CME Watch Tool, Fed Watch Tool, basically what it does is it shows you what bond investors, by far the best investors on the planet. These are sovereign wealth funds, etc. Institutional, high level. They get market calls better than anybody else. Okay, so with that in mind, they're forecasting that the Fed will keep raising interest rates by 25 basis points at the upcoming March meeting, then in the May meeting, then in the June meeting. That was the consensus up until about a month ago. Then we had January, where the Nasdaq was up about 13%, and now if you look at the Fed Watch Tool and stretch it to September and to July, September, etc., it doesn't show any signs that at the end of 2023, the Fed funds rate will be anywhere close to 5. It's either going to be at 525, 550. So in that world, think about that world for a second, where the Fed is charging the overnight rate at 525 or 550. Okay, what does that mean for the universe of asset classes out there, for the 10-year bond, the 2-year bond, the 5-year bond, the 30-year bond? What does it mean for the price of capital when interest rates are that high and not letting up? It means that for one, cash is a good alternative to other things. In other words, the zero interest rate world where cash was trash, etc., that's out the window. Cash is not trash anymore. By cash, I mean very short dated bonds. Okay, a 3-month bond, a 1-year bond, etc. You can make income on those bonds, and it's not you and I that move the markets. It's big players that move the market. So if those big players can park money for 1 year in bonds and get 5-6%, that's what they will do, and they will not go and fund VC companies that are losing money, or put the money in the S&P 500 where the dividend yield is like 1.5% when they can make money lending money to the government and getting a guaranteed 5-6%. So that's the world we live in, and in that world, the room for appreciation for gold and silver is not that bright. That is the world that we lived in 2018 as well, and during most of the 80s, when you have very high interest rates, and that doesn't play well for gold and silver. So just because that's the consensus right now doesn't mean that in May or June, when the Russians and the Ukrainians escalate this thing, because the mud season or basically the mud is dried up, and they can fight again at earnest, that this doesn't change and that this doesn't impact other things. So what I'm trying to tell you right now is you have two choices. Currently, the market is pricing gold and silver as very unattractive because, hey, interest rates are going to stay high. Institutional money will obviously park it in bonds and not in precious metals, and we are not cutting. So if we're not cutting, and I can get a positive after inflation return on my bonds, I don't need gold and silver. And that's the world that we currently live in. And that means to you, if you're looking to buy precious metals when the sentiment is horrible, now the sentiment is horrible now. Sometimes within the stacker community, the sentiment doesn't show you the real sentiment in the full economy, but the sentiment is not good. When will this change? So it is true that if everything we just said is wrong, and we do get a recession or a hard landing, the Fed will cut. And in a recession, gold is the best performing asset class in the world, shown throughout many recessions in the 20th century and the 21st century. That's one scenario. Let's say we don't think that scenario is coming. What other scenario bodes well for gold and silver? The one that's on the opposite side. So the one that's on the opposite side is, hey, inflation's coming down. It's looking really good. And so we're going to loosen up interest rates a little bit, because 5.5% is a lot for the economy to take. We want growth. We want lenders to start lending back into housing. We want the economy to start moving back into normal times. And we don't want to be too restrictive. That is where gold and silver can really explode again. I don't think it's going to happen this year. And therefore, this year is a great year to just be an accumulator on big weakness, in my opinion. And then as we turn into 2024, the Fed really is sure that inflation is stable and coming down. It will start loosening up just a tad, and that's all gold and silver would need.
Do you see, in the meantime, do you think it stays kind of at current levels, or do you think we're actually in an environment where we might see metals go down this year in price?
They can go down, yeah. Look, for gold, I think anywhere between the 1650s and the 1800s is a good time to pick up a little bit. Now, obviously, if it goes towards the 1650s or 1600s, I can tell you personally, I'm gonna be making an order for 40 to 50 eagles. Now, silver, if it goes back to the 17s or the 18s, that's where I get interested. Right now, 21, it's in kind of a no man's land for me. Not too cheap, not too high. And the reason is, with silver, every time I buy, I want to be buying in a situation where there's a high likelihood that I'll double my money. So at 1750, with my price target, which is 35, anytime it hits 1750, I'm in for more. And I think that's basically my strategy. I don't see a huge breakout happening this year, as long as the consensus is that interest rates are going to stay extremely high and that we're avoiding a recession.
I'm with you on gold, and 1650 would be kind of my number too. And I see that kind of as a floor. If it hits 1600, I would be changing strategy completely. I would be buying more. Above that, and probably more realistically, is in the 1700s. To me, it's like business as usual. With silver, there's a lot going on, and there's also a lot of armchair speculators or armchair analysts who are coming in saying things like record lows in the COMEX, we're running out of silver, China's coming back online, it's electrification, which is copper, not silver. But all of these reasons are supposed tailwinds for silver. Like, silver is going to have a big year. I personally, I feel like I'm kind of the outsider on that, because I don't know that I agree there. You just mentioned $35 silver, though. I wonder if you could give us maybe a few reasons how that might happen, and if you could maybe address that idea of the shortages in the COMEX.
We live in a world where the dollar is the dominant fiat currency. About 60% of global transactions. Nobody is currently challenged that in a major way. Sure, there are always things and always challengers, but for now, the dollar is the fiat currency, the reserve currency, et cetera, et cetera. In that world that we live in, gold has accumulated or compounded about 6.6% every year. And if you project into the future, it will continue to do so unless we introduce a new monetary system, and then we'll deal with a new model. In that world, gold is going obviously higher in general, in a general term. And in the 21st century, it's done much better than in the 52-year span. In other words, if you just look at 2000 to 2023, it's gone from 250 to about 1800. That's much higher than 6.6% a year. For silver, it's accumulated during that 52-year period at about a 3.3%. So about half of gold. That's why gold is far better at long-term accumulation of wealth or preservation of pricing power, right? Whereas silver is much better as a trade, because if you can catch it going up double, triple, etc., it's incredible. So that's just to be clear about that. Gold is going way higher. Silver is going way higher. Gold usually at a 6.6%, silver at 3.3%. That's the idea. Both of them doing better than beating inflation. Now, where does silver 35 come in? We just came from a 2011 till 2020 period where the dollar was in a huge bull market across the world. Look at the DXY index. It just rallied incredibly for 9 years. Now it's starting to come down. It's still very high in general terms, but it has come down from the all-time high. And I think that as the decade continues, we will really be in a bear market for the dollar. So the DXY can go towards the 90, maybe towards the 85, and that is a big move for the dollar down. And conversely, it will mean a huge move for silver up. I don't know what will cause it to point to like a day or something like that, but we are in general terms, we are in an environment where central banks are buying gold in record amounts. Supply chains are breaking up around the world, so companies are doing everything they can to source metals. So there's a lot of demand for precious metals. And from the perspective of what really moves the price of silver, the retail crowd, I think that as you see that inflation doesn't go away, and it won't. I think that 2022 was just the start. I think that you'll continue to see high CPI numbers, and we all know that those are artificially low. So I think that in the next 3-4 years, as you continue to see very high inflation numbers, the price of silver will really go up. That's my opinion. So that's how I get to the 35. The shortages, silver shortages have been a story since I think since Rick Rule was 20 years old. So it's there's always a shortage in silver. Sometimes there's more, sometimes less. The story is still out there. If we really look at the history of silver, go to wealthresearchgroup.com/COMEX. It is the best online report about the story of silver from the 70s till today. You'll know everything you need to know about silver, silver spoofing, JP Morgan, how everything that you hear about today online, how it got developed with no fluff and drama. Essentially, two tycoon oil Texans, the Hunt brothers, cornered a third of global supply and warehoused it in the late 70s. The government stepped in. It was a court case, and it was basically liquidated by the end of the 80s. And at that point, there was a lot of silver back in the market, filtering through. It got demonetized from a central bank level, and by the time the late 90s came by, it was so cheap, just so dirt cheap, that even Warren Buffett saw value in it, and he got his buddy Bill Gates to also get excited. They both were buying silver, literally, and made a lot of money. In 2000 and 2001, as 9/11 happened, the world, paradigm shift completely changed, etc., etc. The bottom was in for commodities, and war started just like war is starting today. So kind of connect the dots there, and but very differently, Greenspan slashed interest rates to jack up the economy, whereas now we're doing the opposite. But what happened was there was low inventory on the COMEX. That low inventory is also happening right now. So we are in the same, if you want to have like a juicy comparison, we are in the same low levels at the COMEX right now as we were at the bottom of the 2001 bear market for silver, right before it went from like 4 to 49 eventually in 2011. So we are at very low levels, but do some real due diligence. If you really think that there's some sort of shortages, call the 10 biggest publicly traded silver producers. Ask to speak with investor relations. Ask the investor relations, hey, how is your production going? Do you see any disruptions in silver supplies? Are you getting? Is there anything in the industry that I'm not aware of? And then you can do more. You can literally call the LMA, call the COMEX, call dealers, learn more about this before you really make a decision. Big picture, there's no shortage of silver. There's just low levels right now of inventory in the COMEX. They'll probably go back to normal at some point. So in other words, this could be a lot of seasonality and other things. I do think we are in an environment that bodes well for commodities and a lot of demand for commodities, because in a high inflation environment, governments love to spend on infrastructure, because infrastructure programs are 10-year programs or 15-year programs, and inflation basically evens out during those years. So that's why it's much better to invest in infrastructure in inflation periods than in growth and tech, which rely on zero interest or very low inflation levels to work out. Otherwise, they disrupt all the valuation models.
If we were to close this down and just look at buying, like, what's our strategy this year? How do we go hard? Do we go, same as always? Do we accumulate? Are we selling? What are we doing with gold and silver if you want physical?
Look, my strategy is basically never changed. So I buy on very hard crashes a lot, and the rest of the time I go very, 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 very light, and just keep what I have. Never sell my physical. What's the point of buying physical if you're going to sell it? If you want to trade in and out, there's all sorts of ETFs, options, leveraged ETFs, miners, etc. Whatever you're hoarding to build like a nest egg, buy on big crashes, and the rest of the time follow the story and get involved. And if you like this, the breakouts, then learn the other vehicles that you can make a lot of money in these other vehicles, what I just mentioned, because then you can take those profits and lower your cost of purchases of the physical.
We're going to come back to that idea of planning. You and I talked earlier. Let's have a whole interview devoted to that idea of overall buying strategy. I think you've got a lot to tell us on that. All right. Did we miss anything? Anything else we should cover?
Before I sign off, if I think people should know that that there's a mini World War III happening already in space. In other words, the fight for dominance over lower orbit, which is the best height advantage you can have, is underway. And just so you know what's going on there, make sure you download wealthresearchgroup.com/space. I think it's really imperative that just people know what's the fight.
Are we talking about Chinese weather balloons?
No. No, I'm talking lower orbit, but yeah, if you want to talk.
No, we'll pass on that. We'll go right. I'll get you a link on that as well. I get where you're good.
Okay.
Okay. So Lior, thank you again. Always appreciate having you on.
Thank you, sir.